What's good on my stock market homies? It's your boy Kevin. In today's video, we're going to be talking about some stocks that I think could be the next ones to squeeze. That's right, short squeezes like the ones we just saw in AMC stock and Clove stock, similar to what happened in GameStop. So we're going to be looking at a couple stocks that have the ingredients to short squeeze to the moon. We're also going to be breaking down some major news that just dropped regarding the infrastructure bill. The infrastructure bill is very important for the direction of the overall stock market because the overall market has already accounted for the money that's going to be flooding into the market if an infrastructure bill can indeed get passed. So this is big news. We're going to be diving into it. You're going to want to stay tuned. If you're new to the channel, we talk about the top stocks in the stock market every single day. So go ahead, hit that subscribe button, turn on the notifications, and everybody do me a big solid, destroy the like button. The like button is not our friend, and every like on this video will send the stock market up by 1%. So go ahead and hit that like button. Let's jump right into the charts and let's talk about the overall market. This looks like a penny stock chart, but we're actually looking at the S&P 500 index, the SPY, and we are currently trading at all-time highs, and I think that trend is going to continue. Let me explain. Joe Biden's $2+ trillion infrastructure bill never had a chance to get through the Senate because the Republicans just weren't going to pass it. And the Democrats' majority in the Senate is too thin. They are going to need some Republican support to get anything passed. Well, it looks like we have a bipartisan bill that Republicans and Democrats are both going to agree on. Susan Collins, a senator from Maine, she is more liberal than her Republican peers in Senate, but she is more conservative than most of the Democrats in Senate, right? So she's that swing vote. Very important to get an infrastructure bill passed. If one's going to get passed, Susan Collins of Maine is going to need to be on board. Another swing senator is Joe Manchin from West Virginia. Well, Collins came out today, Sunday morning, and said that there's a bipartisan infrastructure bill that she's going to support. And it gets even better. Not only are we going to get a bipartisan bill, which will inject money into the economy, good thing or bad thing, let me know in the comments, what do you think? Do you think giving a bunch of money in the form of an infrastructure bill into the economy is good or bad? Let me know. I think short-term good for the stock market, long-term bad. However, she says this infrastructure bill will not undo the 2017 tax reform bill that was passed by the Trump administration. This is absolutely huge for the stock market. Biden had came out and said that he was going to raise taxes, capital gains taxes, and there was going to be some tax hikes. The market got scared. More taxes for corporations lowers those profits for the corporations, and what drives the price of the stock market is these corporations coming out with good earnings. And if they're paying more taxes, the odds of them coming out with really good earnings reports lowers. So let's take a look at what the 2017 Trump tax plan included. The Tax Cut and Jobs Act was the largest overhaul of the tax code in 3 decades. The law created a single corporate tax rate of 21%. It lowered that overall corporate tax rate. H&R Block reported that the average tax cut was about $1,200. So basically it was a tax cut, I think, for mostly upper middle class, your wealthier individuals, and corporations. The market was nervous. The market's sphincter was puckered because it did not want to pay more taxes, obviously. So Susan Collins coming out and saying that we have an infrastructure bill, bipartisan agreement on this bill, and it's not going to undo the Trump tax cuts is huge. I cannot overstate how big this is for the direction of the overall stock market. I think we see a jump in the market next week and over the next few weeks. I think the market was truly expecting a fight over this tax bill. Maybe we still do get a fight, but it's not going to be happening in the infrastructure package. All right, so let's talk about the stocks that I think have the potential to be the next ones to squeeze, similar to what we're seeing in AMC stock. What we're seeing with AMC stock is a short squeeze. We've talked about it on the channel many times, but I'll talk about what a short squeeze is and the ingredients that you need to have one so we can narrow down some stocks that have these same ingredients. So we have AMC. It was a heavily shorted stock. Some people have said that almost 90% of the float was sold short. So if there was 100 shares of AMC available to buy or sell on the open market, 90 of those were sold short, many of them naked short selling. So you have a lot of shorts in a stock. The three ingredients that you need for a short squeeze. Number one, you need a stock that is heavily shorted. We're looking for stocks that are 30% or more of the float is sold short. Number two, we're looking for a catalyst. What is that catalyst? Either a fundamental or a technical catalyst that starts to send the stock higher. Number three, we need increased volume. We need volume to start coming into the stock. Retail traders chasing that stock higher. Those short sellers start to cover. You get a buying frenzy. Remember, we have short sellers all in this area, and then once the stock breaks out right here, the shorts start to cover. You have buyers coming in on top of that, sending the stock higher. Now that we know what the ingredients we need to see for a short squeeze, let's jump into a screener and take a look. It's not hard at all to find stocks that are heavily shorted. I use a free stock screener. I'm sure you guys have heard of it, finviz.com. It's absolutely free and it works great. I go to the screener tab up there, right there. You click screener, and then we're gonna wanna go to all. You click that all tab, and it's gonna give us more criteria to screen off of. So then we're gonna go to float short or short float. Float short, we're gonna go there and we're gonna say over 30%. We're looking for heavily shorted stocks. We're attacking those short sellers. We're gonna grab them by the wabbles, the balls, the nuts, and we're gonna squeeze, and that stock is gonna go higher. All right, right off the jump, all of these stocks are shorted more than 30%. I see one right away that I like, and it coincides with the infrastructure bill. Remember, the infrastructure bill initially came out and they said that they were going to be adding 500,000 plus EV charging stations in this new infrastructure package. EV charging stations were a big focus for this infrastructure package. BLNK charging, one of my favorite EV charging stocks, shorted. 34% of the float is sold short, so that's criteria number one. Criteria number two could be the catalyst, right? We need a catalyst to start sending that stock higher. That is going to be the infrastructure bill, that bipartisan infrastructure bill. And number three, we need to see volume to start coming into the stock in order for that stock to squeeze. Okay, so we don't have that volume coming in yet, but that's okay. Why is that okay? Because we can be in the stock waiting for that volume to come in. We set our risk, we set our stop loss, we set our profit targets, and then this trade is automated for us. None of our emotions get in the way because we already have that plan down. Okay, we have defined risk. What's gonna be our risk? Let's jump into an hourly chart. It'll give us a better idea of where we can risk off of. If we zoom out, we can see that we do have some support here at the 3480 area. That's a good area to risk off of. And if you don't want to risk off of an area that you're risking $5 a share almost, so we would need to get $10 per share profit to satisfy that 2-to-1 risk to reward ratio on our swing trades. We could risk off this prior pivot right here at the 3840 area. I would be looking for a breakout back higher, breaking out of this most recent high up near 4250. That is a 2-to-1 risk to reward ratio. The plan is set. I think BLNK charging has the potential to squeeze and retest all-time highs. I'm talking about all-time highs up near $65 a share. EV charging, we've talked about it on the channel before. I love the business model. Reoccurring revenue, and you can just slap those EV charging stations literally anywhere. Grocery store parking lots, mall parking lots, on the side of the road. It doesn't matter. You can put an EV charging station anywhere, and then once it's there, it's going to generate your company revenue on a reoccurring basis. Maybe you have a subscription service, $50 a month, you can charge your car unlimited times. If you want to pay per time, maybe it's $10 per charge. Who knows how they're going to do it, but I love the business model, and I think these EV charging companies are undervalued and they're heavily shorted, which is icing on the cake. Not only do I like it long term from a fundamental and growth prospect basis, I also like it from a short-term short squeeze trade perspective as well. All right, so we're back on the FinViz screener, and we have Tattooed Chef as stock number 2. Well, let's take a look. Let's see what percentage of the float is sold short, and we have 35%. We're talking about a heavily shorted stock. Tattooed Chef, the plant-based food company that absolutely took off. It garnered the attention of retail investors. We're talking about a company with around a $1.8 billion market cap that has sales of $200 million annually, and that sales number is just growing steadily. We're talking about a company that is still growing. Ingredient number 1, heavily shorted stock. Ingredient number 2, catalyst. Tattooed Chef just got their vegetable products in every single Whole Food store in the United States. We're talking about pre-made meals that are going to be in the frozen food section. This is going to increase the revenue almost guaranteed, right? You have more products in more grocery stores, your revenue is going to increase. I think the next couple of earnings reports that Tattooed Chef comes out with are going to be very good. I think they're going to beat those revenue expectation numbers. That's the catalyst. If we take a look at the chart, we can plot out our potential swing trade here. All right, so we can see that we've been chopping around. This stock has been chopping around in a pretty sizable range. We have a range of $28 a share down towards $14 a share. It doesn't look that big, right? In the last 3 months, we've been just chopping around in that range, but that is a range of 100%. That is a big range. And I think once those revenue numbers come out and we beat expectations, we retest that $28 area and we break out and break over $30 a share. The risk for me is going to be down here towards 17 bucks. I can't risk all the way down towards 14. It's just too wide of a stop loss. And my profit target is going to be up near the $30 per share level. The final stock that I think has the potential to short squeeze is going to be Workhorse. And Workhorse is iffy for me. Why? Because what is happening with Lordstown Motors, and Lordstown Motors and Workhorse are kind of jointed at the hip. A lot of the executives have been involved with each company. It's kind of an incestual relationship between Workhorse and Lordstown Motors. Lordstown Motors, of course, issued a notice to shareholders warning them that they may not be able to continue, that they may be going out of business. However, Workhorse, short float 40%, and I also think that their product is better than that of Lordstown Motors. I was never a big fan of the Lordstown pickup truck. I never really understood the business model. It didn't look like a pickup truck that would be targeted towards fleets, and it didn't really look like a pickup truck that common consumers would want to buy. You also have a lot of competition. The most popular trucks sold in the United States, the Ford F-150, you have the Chevy Silverado. They're coming out with their EV trucks as well. It's not a good look for Lordstown Motors. However, Workhorse, I like their product better. I like the fact that they're in the last mile delivery sector. They know who their customer is and who to target. They also have the Horsefly drone technology they're working on. They also have the Metron fleet management system where they can maybe gain some recurring revenue. So I think the prospects for Workhorse are much better than that of the prospects of Lordstown Motors. Catalyst number 1 is satisfied. 40% of the float sold short. Number 2, we need a catalyst to start the short squeeze. For me, this is going to be a longer term trade if I do indeed take it, because I think that catalyst is going to be deals that they ink over the next couple of quarters. We've seen them land deals with the companies like UPS, and I think we see more of that as these bigger delivery companies transition away from carbon emissions towards these EV last mile delivery trucks. So I think Workhorse is a decent price right now and does have the potential to squeeze. It is risky because I don't trust the executives. They flooded the market with shares when the stock was trading way up here right before the USPS contract was announced that they did not get it. Executives were flooding the market, so that is a little bit scary. But we do have the defined risk. That 1340 gap area should act as support, and then you look for that area to hold and for the stock to bounce back up and squeeze those 40% short sellers out of the stock. Gonna wrap it up. That's my 3 stocks that I think have the potential to squeeze. We talked about the infrastructure bill, how that is going to impact the market. I think it's going to impact it in a good way, short term for sure. I'll catch you guys in the next one. Get your 2 free stocks from Webull. Link in the description. Those 2 free stocks will be valued up to $1,850. I'll catch you guys in the next one. Until next time, peace.
It's not a game, it's a rich thing.